We are looking to hear from the president today, certainly trying to get the public on board with what is really a massive stimulus bill here. But we've also got some data recently that seems to suggest that even without the stimulus in place, things are moving in the right direction.
Yeah, thank you for having me on the program. And the data is very much moving in the right direction. I don't think that we needed the December stimulus package. I don't think that the economy needs the new $1.9 trillion package that's going to be signed into law this week. But nonetheless, we're going to get it. And it's going to create a situation where it's going to add fuel to the economic fire here for 2021. My base expectation for real GDP growth is 7%, which would be the strongest year of economic activity that you've seen in the US since 1984. And one of the key considerations that I was really monitoring in the first quarter is whether or not the COVID cases would continue to rise, and that would hinder economic activity. But looking at retail sales that we got from last month, coming in at positive 5.3%, which blew out consensus expectations, tells me that you're seeing an accelerating economy, and it becomes a much better reality of us hitting that 7% real GDP target. But nonetheless, we're getting stimulus, and it's going to continue to help the U.S. economy grow way above trend levels.
Yeah, Jeff, I mean, we've been taking a look back at kind of how this all played out. And when we look at unemployment, we often look at it at a state-by-state kind of level here. We talk a lot about a K-shaped recovery. But right now, I mean, it's kind of shocking when you look at those rates over the last few months here in the way that states have been hit and came back. Hawaii being one of those standouts. It led the country with the worst unemployment rate and has seen a pretty rapid recovery based on the way that they tested and locked out travelers to the island without having been vaccinated or tested beforehand. I mean, what do you make of maybe the way that the nation as a whole, state by state, might be recovering at different levels here this point a year into this, and maybe how that stimulus might fix things moving forward?
Well, if you look across the entire U.S., you've seen cases come down dramatically across every part of the U.S. And I think that really is going to continue to be the case. And I think you're going to see a disproportionate reacceleration of economic activity on those states that have more service-oriented jobs. My expectation for job creation this year is at 8 million, which would be close to 700,000 jobs created per month. And the key reason why I think that that's the case is about 80% of the jobs that were lost during this recession were COVID-sensitive industries. And when you reach herd immunity sometime in the May or early June period, you're going to see a drastic reacceleration of that part of the economy. And I think you're going to see much faster job creation than what you've traditionally seen coming out of a recession. So I think the stimulus is certainly going to help. It may hinder job creation because the unemployment benefits are quite generous until September. But nonetheless, I do think that you're going to see us grow much quicker than anticipated, certainly a lot quicker than what you saw coming out of the global financial crisis.
And Jeff, you mentioned earlier, you don't think that this $1.9 trillion bill was a necessity when you consider where the economy is today. What's going to be the impact from it then? Are you in the camp that you think that this is really going to take inflation even higher?
Yeah, in the near term, I think you're going to see an inflation scare over the next 3 to 5 months. That's a combination of two things. You're going to have really easy year-over-year comps in March and April as the economy locked down. So you're going to just see inflation naturally grind higher near term, but you are seeing some inflationary pressures across the economy. First off, if you look at inventory to sales in the retail sector, right now they're at the lowest levels on history. So you're certainly going to see some goods inflation near term, but also with the services sector, most of these areas cut costs to the bone in order to survive in this type of environment. And when you reach herd immunity, you're going to have massive re-engagement with services, but you don't just have the capacity that you had 12 months ago. So I think you're going to see a near-term burst of inflation. But given the amount of slack that you see in the U.S. economy, I do think that this is transitory. But again, with this near-term burst of inflation, I think that's going to be a catalyst for probably some higher 10-year Treasury yields and a continued rotation into value in some of your more epicenter stocks that you've seen over the last 5 months.
Jeff, it's good to get your insight today. Jeff Schulze, investment strategist at ClearBridge Investments.